Everyone, Kyle, Gorillas Trading, aka Silverback. So today I want to take the opportunity to talk about like the must-haves with charting and sort of technical indicators. Now this is for short-term trading as well as long-term investing. So you can use this to, let's say if you're a long-term investor and you're looking to sort of time the market like right around now, you kind of want to make sure that you're not sort of buying stocks that are going to continue down because you don't want to go into the red. You want to kind of find that good entry point, and then you also want to be able to tell where you want to take profit, right? So if you're a long-term investor and you're looking for 1 to 2 year hold or even longer, you still kind of want to know where the stock price is going to go and where it's going to meet resistance eventually, and sort of make sure you keep an eye on those levels, right? So what you see here is a tool called tradingview.com. It's what I use to do charting. So you can create a free account on there, and you can also get like a paid account, which allows you to have multiple charts up on different monitors. But if you're just kind of getting started into stocks and stuff like that, and you kind of just want to trying to learn, tradingview.com is a great way to do some charting. So we can just kind of take a look at what tools I use. So on TradingView, I have several indicators. So you can come up here and click indicators, and then the paid version allows you to add multiple indicators. I think the free version limits you to like 1 or 2 indicators. So some essential indicators, it's going to kind of tell you when is a good time to buy and when is a good time to sell, or when is a good time to short and then when is a good time to cover, right? So we can profit no matter which direction the stock's going, whether it's going from low to high or high to low. We can make sure that we're profitable in both directions. So from the top here, so now we're looking at Tesla, and this is the daily time frame. So if I click this, I can change my time frame, which is going to give me a little bit different story about what is happening with Tesla during that day. And you can see like we have this nice little trend line, so you can create your lines of support and resistance. So I did take a trade on Tesla today, and it was a profitable trade. And the trade was short to the downside here on the break of that, because we were in a descending triangle. So obviously drawing your lines is important to understand places of resistance. So you can see that stocks tend to trade based on certain mathematics and patterns. That's because the algorithms are trading them. So it's computers that are trading these over time. So you can see it comes up in this line, comes up in a year, and so now we can draw a simple trend line, and it rejects it again on the 3rd. So this was actually a good entry point for a short. I like to wait for breakout patterns. So when support is broke, I actually take the short here and write it down and try to scalp it, versus up here is a little risky because you never know when it's going to catch these. So let's just take a look at the indicators, and we can kind of talk to Tesla more in depth. So what we have is RSI. So RSI is going to tell you when things are either overbought, neutral, or oversold. So this little range here in between the hash marks is a neutral sort of trading range. So you can see that Tesla was sort of neutral RSI, so it was neither overbought nor oversold. So it was sort of trading flat, basically. So if you go back in time, you can see that, let's maybe go to the daily. When Tesla was up around the 970 area, the RSI was extremely high. It was at 95. So like a neutral range is between 70 and 30. So when something goes over 70 and continues up, it's most likely going to come down. So it's definitely not a good time to start buying it. It's more of a time to start selling it if you already own it, or consider a short position and catch it on the downtrend. So that's RSI. It's going to tell you if it's overbought or if it's oversold. So overbought is 70 to 100, and oversold is 30 and lower. So you can see that when we came down to its lows here at like about 350, the RSI dipped below 30, and then we had that bounce up. So we got to like RSI 24 that day, right around here, and then it bounced, right? So pay attention to RSI. It's pretty important to understand overbought and oversold. That's that indicator. Throughout the day and how things move, what we have is called moving averages. So you can see that I have moving averages here as well as volume bars, right? So some moving averages that you want to pay attention to is a 9-day moving average. This is the 9 EMA, so it stands for exponential moving average. So it's just going to calculate moving average based on 9 days of price action. Then I use the 20-day moving average, the 50, and the 200. So these are points of support and resistance. So how does this apply to the stock pattern? Well, as things start moving up, right, it's gonna, a really bullish trend will hug the 9-day moving average. So you can see that's this line right here, this red line right here. So as the price comes up and it gets off and extended off that 9-day moving average, it's going to want to come back to that, right? So these pullbacks are great to watch for if you're let's say a long-term investor in Tesla. So had you been buying some shares down here or taking some call options, you would sort of try to follow that 9-day moving averages, and it was an extremely bullish trend for a really long time, so you didn't really have to exit. You could actually add on every one of these pullbacks, so they're really healthy pullbacks, and it just kept squeezing, and then eventually it got very, very far extended up here into the 970s, so that was actually a good place to get out, right? So it's too far up, and then we saw a huge break to the downside, and that was when the RSI was 97. So those are moving averages, right? 9, 20, 50, and 200. That's what I use. I think that the rhythm and flow of the price action sort of follows those moving averages. You can see that it came back into the 9, caught that, went up again, then it kind of came back down to the 50 here as support, and then bounced, right? So these moving averages are relatively important to understand where the price is going to be going and what's acting as resistance. So currently now the price action is below the 20-day moving average, and it's trending back down. So we could see support into this 200 or even go test lows over the next couple days or weeks. So let's see, it's sort of trending back down. Another indicator that I use on the chart itself is called VWAP. This is the volume weighted average price. So it's going to tell you based on the total volume for that candle. So this is 1 day, and then this is an hour. Sort of like, where's the volume at, right? So it usually follows the 9 pretty closely, but it does act as support and resistance in some cases, and the price action always kind of wants to find its way back to that VWAP, is what we call it, right? So we're pretty overextended here on the hourly. I could imagine overnight that we would move back up into these moving averages or move sideways and let the moving averages come into that price, right? So it would act as resistance in this downtrend here. So that's moving averages and VWAP. Very important things to sort of understand in trading, right? And even in investing. So you don't want to, I wouldn't want to like be buying here per se, because the price is going to be coming back up into all this resistance. All these moving averages are now resistance, and they're telling you that the trend now is going back down. And it's especially bearish because we broke this support that was tested right here over the course of several days, even this entire week, right? So it kept testing that, broke it, and now we're going down. So to what level, I don't know. We can only take a look at what the chart is giving us, right? Another indicator is the TTM squeeze. So the TTM squeeze is something it's relatively new to me, but I'm finding it very valuable. It's going to show, like, I think the ebb and flow of where the momentum is going So we can see that during this time we kind of had an up trend right through here, and then it just lost steam, came back to a neutral, and now we're seeing like the red bars sort of grow down, right? So I can imagine that it would try to find its way back to a neutral position, and if that doesn't work, these red bars are going to grow exponentially, and we could see something like this over here where they're just continuing to grow, right? So it's showing you sort of where that momentum is going, and then if we get into this flat area, you could see like a huge shift from down to up, or neutral to one direction or the other. So I'm starting to like that indicator as well. So that's really how I use charting to kind of time my entry and exit. There is one other tool, and that's called Fibonacci. So Fibonacci is a mathematical sort of tool. It's relatively hard to explain, but basically you don't have to do much mathematics on your own. You just draw the tool to understand potentially where the price is going to be going. So how do we do that? Well, let me jump out to the day chart here. Okay, so we can see, perhaps we'll do one on this leg down. So we have you draw the tool from peak to trough, and you identify certain patterns. So this pattern is going to be an ABCD pattern. So we grab my Fibonacci tool. I go from this trough here back up to this peak, right? So I'm looking for this trend to change directions, right? So this is A, this is B, this is C right here, C right there, which turns out to be about 50% retracement of that peak to trough. So this is a bearish pattern, so we would look for it to retrace up to about 50% and then see what it does there, and in these downtrends usually it would reject about 50% and continue down, and that's exactly what it did. So where is it going to go eventually after the retracement? Well, we could take a short position like right in here on the break of this daily candle's low. So the next day we would short it here, and we could essentially ride this. So let me draw where our previous support was. So as time goes on, we come back down and we test that 600 level, and it kind of holds it for a little bit, and then eventually we start selling again. So where do we go? So Fibonacci has retracements, and then they have extensions. So the extensions sort of provide a place where you want to take profit. So we have certain extensions here. I use the 127 and the 164. I find those pretty common. So on a break of that low at 600, we come down, and this would be a good profit-taking spot, 516. You could have held on to this for the 200-day, and it looks like a lot of people did, and it was extremely bearish at the time, so it went right through the 200-day, right through the 168, all the way to 350, which happens to be a previous breakout spot over here. So that was pretty strong support, and probably why it went right through those extensions. Obviously, it didn't go down to that extension because it's only $60, which would be a little silly for Tesla. So that's basically all the tools I use. So just to recap, you have TradingView as the charting tool, and then on TradingView you can add indicators to your chart. So one indicator is RSI. It's going to tell you if things are bought and oversold. Then you can add your moving averages, 9, 20, 50, and 200. This is going to basically show you the trends and where the price is sort of being rejected or acted as support on those trends. And then you have VWAP, which kind of goes along with those moving averages. right? And then we have the TTM squeeze, so that's going to show us sort of where the momentum is going, right? So we saw a huge shift from the upside up here back down to the downside here. So we're coming back to a neutral position. And now it doesn't have to go back up, right? So this could actually continue to grow again and see a huge, a lot more selling and downside. So this could actually peak again. So that's on watch coming up into the future here in the next couple days or weeks. And then we have Fibonacci. So Fibonacci is going to tell me, you know, after a certain leg, this move here. Let's say we do this one, and we have that new ABCD pattern. So this is A, B, and then C, and potentially D going down. We could see 300 if it breaks this previous low. It could go test that low. We'll kind of just see sort of what happens coming up. I think maybe a reasonable estimate is about 445. See that this week. So I hope that is helpful. Again, the offer is, so I sort of try to define what I was offering. So it's more education, I think, than anything. So the deal is on Gorillas Trading. I'll just jump over here. Is it's more education and alerts. So I'm giving people a 2-week trial to just kind of take some one-on-one sessions with me. Try to teach you during those one-on-one sessions anything that you really want to know, and it's more of like a transfer of knowledge at that point. And then I recommend people opening up a TD Ameritrade account, Thinkorswim, and doing paper trading. So you can take a look at those alerts that I'm providing, and you can paper trade them and track the performance and see if they're successful for you or not. And then you can choose to cancel within 14 days if it's not a fit, if it's not really working and you're not really feeling it. And I'll just give you a full refund. So after the 14 days, hopefully I can win your business, and you'll be successful at trading or even thinking as a long-term investor and buying stocks on your own without really putting them into like let's say passive investing like ETFs and things like that. I'm here to help. Kyle at GorillasTrading.com if you want to reach out. Obviously, you can go to the website and check that out and everything that I got on there. And thank you so much. Cheers.